This video should be very helpful. What is the best trading strategy or style for overnight swing trading? I was watching a YouTube video about blackjack and specifically card counters and their process and how they approach the game of blackjack. And then it struck me. What we are doing with overnight swing trading has a lot of similarities and common approaches to blackjack card counters. On this channel, we focus on a very specific style of overnight swing trade, and we refer to it as the SPY T trade, and there are three parts to it. The first part is the time. It's an overnight swing trade, and we buy at the end of the trading day, and we sell in the morning. The next part is the signal. Which direction are we facing? And we use the SPY Tomorrow signal, which is free on the front page of spytomorrow.com, and it's posted at 4 o'clock Eastern Standard Time, right after the market closes. The third part is the style, which is most of what this video is about. What type of trade do we make? What decisions do we make in terms of our trading? Now, traditionally, a SPY T trade uses a 2-to-1 options ratio, which means if the signal said up, we would buy 2 calls and 1 put at the same strike price. And the expirations, depending on how aggressive you want to be, we tend to work about 4 to 7 days out. But if you want to be less aggressive, of course, you can go 2 weeks or even a month out. Let's first dig into the signals before we talk about the styles. The signal can be anything that you want it to be. You can use money flow, put to call ratios, the trend of the market at the end of the trading day, and of course the SPY Tomorrow signal. Now, some people use it in combination. Use the SPY Tomorrow signal as their base. And as we know, we're using the Purple Max I algorithm, which after 100 trades was correct 75 times, meaning it's been 75% correct. But you can also use the other signals to kind of create a signal for the signal. Now, we have pressure signals within SPY Tomorrow. For example, if we see a pressure signal from 0 to 6, actually the indicator's only been correct about 66% of the time. However, if it's 8 or above, it's been correct 87% of the time. And actually, the number 8, oddly enough, has been correct 100% of the time during those 100 trades. That'll, of course, not last forever, but it's an interesting fact. The thing is, based off of that, like the blackjack card counters, we can place our bets or our position sizes based off of the pressure number. So if it's a lower pressure number, we may just put a little bit of money in. If it's a 0 or a 2, we may not even do anything at all. We'll just save our money. If it's an 8 or above, we may put more in, just like the blackjack card counters. And you can develop your own system and keep a log. Keep track of what happens when the market is trending up at the end of the day. What happens the next day? Or again, put call ratios, money flows. There are so many ways that you can go about this and combine it with the SPY Tomorrow signal to give you an advantage in your overnight swing trade. So let's talk in general about the style of SPY T trading. Now, there are many different approaches to SPY T trading, and SPY T trading is generally a ratio style trade, and there are different ways to approach those different ratios, and we'll talk more about that in a few moments. But the idea is this: day traders have an advantage over us. They can stop out if a trade doesn't go their way. But we're overnight swing traders, so we don't have that luxury. So we have to place a hedge to protect ourselves. Now, the traditional SPY T trade is the SPY T A trade. So if our signal says up, which means at the end of the trading day, the algorithm measured positive pressure, which often correlates about 75% of the time on average to a positive open in the first half hour. And so we would buy in that situation with a SPY T A trade 2 calls to 1 put. And again, there are many different types of trades, many different ratios, the SPY T A, B, C, and so forth, which I will talk about in a moment. but there are different reasons to use those different trades because market environment also plays a role. And we'll talk more about it in a few moments, but if the volatility is really low, many of the SPY-T trades will not work very well. A great case study is the SPY-TS. I thought it was the best trade you could do. It was the safest trade. I called it the SPY-TS because it was the stable trade. However, as volatility came down from when we started using it in the mid to upper 20s IV, and it slowly started coming down, that trade started to fail. And so we actually have an indicator within SPY Tomorrow that lets us know based off of volatility which are the best SPY-T trades to consider. So let's talk about the different SPY-T strategies. And the first one is the SPY-TA. The SPY-TA is our foundational SPY-T strategy. It's a 2-to-1 options ratio. So if our indicator said up, we'd buy 2 calls and 1 put. If our indicator said down, we'd buy 2 puts to 1 call at the same strike price, usually about 4 to 7 days out in expiration. However, if you don't want to be that aggressive, you can go out further, maybe 2 weeks or even a month out. Just know that you will not have as much of a move overnight if you don't have a close deadline for your expirations. The next trade is a foundational trade, and it's the SPY-TB trade. And the SPY-TB trade only requires buying 2 options, which means it can be less expensive. What you'll do is buy, if the indicator says up, you would buy a call right at or in the money. And then you would buy a put at half price. Now, this is a really good trade when there's a little more volatility. Currently, it's not a great trade when volatility is so low. So in those situations, I go to some variations of the SPY-TB trade, and I'll try the SPY-TQ trade, which means we're buying our call at the money, but our put is 1/4 the price of the call. Or the SPY-TBT trade, which means we're buying our call at the money, but our put is 1/3 the price. Those seem to be working much better in these lower volatility environments compared to the SPY-TB overall. We have a SPY-TC trade. It is not my favorite trade, so I'm not going to get too far into it, but you can see what it looks like. This is the SPY-TD trade, and it's really good in high volatility environments, but it is risky because all of your options are out of the money. So you can lose money a lot faster compared to the options that have some positions in the money. The SPY-TS is a great trade when there's a lot of volatility, but as volatility came down, we found out that it's just like a straddle, does not work very well because you really do need a good move for it to make money for you. It's like a straddle, except you're leaning a little bit into the money, and so if you have a good move, you're going to make some money, but the thing is, if you don't have that move, you're just going to lose money via theta. The SPY-TQ trade is very similar to the SPY-TA trade. You're buying calls and puts at the same strike price. The SPY-TA, you buy 2 calls to 1 put if your indicator says up. With the SPY-TQ trade, you buy 3 calls to 1 put if your indicator says up. And what trades we use certainly depends on volatility. Now our indicator is 75% correct, and a lot of people will just jump in and say, hey, that's fine, I'll just make directional trades and I'm going to end up winning. Well, that's not necessarily the case. It's not a straight line. It's not like you put in $1 and if you win, like in blackjack, you get $1 back. You could put in $1, lose that entire dollar, but when you win, only make 25 cents. So the point being is the wins and losses are different in each situation. You have a better chance of a greater win when the volatility is higher. It's not guaranteed, but the chances are greater when the volatility is moving up and down a lot. You get bigger moves, which means you could even make money if the market goes the opposite direction with the right trade. So you have to decide where you want to be. So it's good to look at the IV of the SPY, of the QQQ, and of the IWM, which I've been using the most lately because it's been just in the 20s and below 20. We have found that really the sweet spot for SPY T trading is in the 20s. If we're above 20, even the low 30s can be okay, but we use the SPY TS as a measure, meaning if the SPY TS trade costs over $1,000, it doesn't matter if your indicator is right or wrong, you're probably going to lose money. And if it's too low, the IV is too low, it's probably not going to move enough. And if it, on average, your trade doesn't move enough, you're just going to lose money overnight due to theta, and that's time decay. So we find that this is the right range, and right now, the IWM, it has been the best for us. Now, there are stocks such as Microsoft, and if you have a stock or another ETF that generally moves with SPY, meaning if SPY is up, your stock is generally up, or your ETF is generally up too, you can use other stocks and you can look for those IVs in the 20s, which will give you a better chance and opportunity to make the money you probably are looking for. But you should test them out. Not all of them are the same. You need to find a highly traded ETF, a highly traded stock to do this effectively. That's why we like to use the SPY, the QQQ, and the IWM, because they're highly traded, very liquid. The bid and ask is not very far from each other, and we can get in and out. So it's still all about making good decisions based on the market you find yourself in. In this low volatility market, I find myself trading the IWM a little more often, sometimes the QQQ, because they both have a little more volatility. And I'm trading generally the SPY TBQ or the SPY TBT trade, but it all depends on how aggressive I want to be in my trade. And that's when I look to the pressure readings. If it's a 0 or 2, sometimes if I know that there's some kind of earnings or economic report coming out the next morning, I may not even trade. However, in general, if it's a 0 to 6, I'll put in smaller trades. Maybe a very, very small directional trade or a small SPY TBQ trade. But if it's an 8 or above, an 8 as of late has been 100% correct over the last, 17 times it's shown up. That's not going to last forever, but I find it interesting. But if it's an 8 or above, I may be more aggressive with that trade. Maybe have a larger position size, or maybe a more aggressive SPY T trade with a larger position size. But no matter what, if I'm going for those larger position sizes, I definitely want to make sure I have that hedge, because if there's a lot of pressure, let's say the pressure is a 16, well, it could flip the other way with a lot of pressure, and if I have a good hedge, I can really minimize that loss greatly, or if it really goes, I could end up making money the other direction. So when you're SPY T trading, think of those blackjack players, playing the odds, looking for those risk-reward ratios, and making the right moves and placing the right bets and position sizes based on what they know, the information that they have. And you can do the exact same thing in your overnight swing trade. It doesn't have to be a flip of the coin. But sometimes you're going to have streaks in which you think you could never lose, and then there are times where it's going to be a few days in a row wrong. It's not going to be a great week. But that happens. The point being is that you want to look at your week. How did you do? And take notes, review your trades, and then do it again next week. Review that week, and then the month, and continue to improve, because you have a toolbox of trading options. You have a toolbox of signals. You have the up or down signal, but you also have signals for those signals. So review your trades, and I'll see you in the next video.